our third Tech London Advocates Forum, which forms part of our TLA resource hub. So for the moment, some housekeeping bits. One, can I make sure that you're all on mute for the moment? So if you can turn off your sound, that would be great. We're also screen recording the forum. So if you don't want to be included, just turn off your camera. And then we'll open up once we, I do my bit, John does his bit. I've got some questions for him. We're going to open it up to the rest of you for some Q&A. And just as a bit of background, I have heard from many advocates over the past few weeks about their experiences running startups, scale-ups, small businesses during the crisis. And the issues have ranged from keeping companies afloat, how they go about managing cash flows, how do they manage and keep staff. We're also getting some humbling stories. We just had our TLA advisory board call, and a number of our advisors are on our advocates directory giving free help and advice. And the stories that we're hearing are really very humbling, very disturbing, encouraging stories in terms of how people are addressing the situation. And as soon as we went into lockdown, I wanted to make sure that advocates still had access to everything that TLA offers. And we want to be and need to be sharing advice, guidance, and expertise, I think now much more than ever. So with our TLA COVID-19 Resource Hub, if you go onto the website, you'll see that we've got a directory of advocates who are volunteering to support and help startups and scale-ups free of charge. And if any of you are interested in doing that, do just drop me a note and we'll follow up and include you. There's online resources and information that can help tech companies. And there are blog posts and advice pieces. We also, in parallel to these TLA forums, we're doing a bi-weekly, what we call surgery podcast, and that is co-hosted with myself and Ollie Barrett. And for those of you who know Ollie, he moderates our big TLA events, and we do those every fortnight. So as I've said, this is our third TLA Forum Zoom call, and every week we have every couple of weeks we have a new and different guest. So it gives me great pleasure to introduce our TLA Forum guest, John McLaren-Stewart. So John, welcome to you. For everybody's benefit, John is the CEO of Venture Risk Groups, which works with entrepreneurs and business leaders to understand and mitigate against the dangers they face as they take risks to grow their businesses. He's also a board member for the CBI. And what some of you may know, I think many of you in the TLA community who will know John, however, he's also a co-lead of our fairly new TLA InsurTech group, which launched back in November. So John, thank you for joining us. It's great to have you here.
Nice to be here. It's not often an insurance broker gets an invite to talk, is it?
Here's your chance, John. Here's your chance. So if you would take a moment, just quickly introduce yourself and just give us some background and information on the current roles that you have.
Yeah, I guess I've been doing this working for yourself, Lark, for about 20 years or so. I've had 3 insurance businesses. I recently launched a hotel, which you know about, Russ, called Sorsha 1875, a vegan hotel, only one in the UK. I sit on the board of a company called Heroes Drinks, which is a community interest company that gives its profits back to military charities, sells vodka. So if you're looking for vodka, this stuff is cheap and in taste tests comes out better than Grey Goose. It's amazing. So if you fancy a bottle of vodka, Heroes Drinks. That's that plug over. I also sit on TLA Tech Scotland Advisory Board, sorry, yes. And the CBI that you mentioned. So I've got a kind of a broad range of interests, and I'm very much a generalist rather than a specialist. But I love the variety of it, and I've loved being an entrepreneur over all that time, even though it comes with some horrendous times.
Well, I think we're gonna dig into that a little bit. So maybe just picking up a little bit. Obviously it's strange times. How have you found the past few months? For example, how have you gotten used to working from home and this new way of life that we all have?
Well, Chris and I launched this business 20 odd months ago. And when we set the business up, we'd always talked about being a remote business anyway. So as we build the business, we are looking to do this remotely, because we always felt that in insurance, what we had to do was get a nice office, fill it with lots of people, incur lots of debt. And we decided that there was a much better and flexible way to do that. And so we were already looking and doing remote working. So for us, this is quite good. So using something like Zoom for us is fairly new, especially at our age. This is a new kind of new technique. Yeah.
Yes. So I guess in addition to that and kind of the new techniques, as a CEO of a company yourself, how have you seen your business affected by what's happening during this outbreak, and what measures are you taking to try and deal with it?
Yeah, well, as you know, it's a bit of a bloodbath out there.
It is.
I think for us at the moment, we are amazingly busy, but I suspect that will drop off soon. I think what we've seen is a surge of companies either changing their insurance programs or looking to make claims. So we've been kind of working away really hard, but we've also heard of companies going bust. We've had lots of approaches from companies seeking to drop insurance premiums because they're doing no business, and so they're looking to get a lower cost. And I suspect that after maybe 2 to 3 months, that will run down, and we will see a kind of an impact on our numbers from that.
Yes, and maybe kind of now jumping into the insurance side of things, insurance markets and COVID. What's going on? There's a lot of news out there. There's a lot of noise out there. Kind of paint a picture of what you're seeing in that respect.
It's really complicated, isn't it? Insurance, I think, makes the world go round. Okay, not so much money. It's all about insurance, because people don't do business unless they have insurance in place, unless their customers have insurance or any contractual arrangements are insured. So this is a really important part of the economy, and it underpins everything. I think we're seeing insurance companies. The kind of modelling that's been done on the potential losses for insurance companies are absolutely horrendous. They're talking, even with a kind of a mid-level downturn, say a 6-month furlough type period, insurers are talking about a $40 billion loss. Now that's the equivalent of 9/11. So these are big numbers. And if it extends further than that, they're talking about like $140 billion loss. Now, $140 billion loss is 2 Hurricane Katrinas, for example.
Yeah.
This is big stuff. And they're already paying out lots of money. But of course, the real focus of attention has been the business interruption aspect, where insurers are pretty much across the board declining to pay any claims as a result of COVID. Yep. And this is causing, you see it in the press every day, this is causing a real fuss. And I think, they're kind of stuck between a rock and a hard place on this. One is they have legal contracts in place, and those contracts are the insurance contracts. However, there are some arguments that say, do insurers have a more moral obligation to help out here, whilst we're in the midst of this chaos? And they do seem to have taken a kind of a very slow response to reassuring people of the action they might take as an industry, not so much individual insurers.
Yep.
And I think that's caused a lot of problem. When you put that on top of TV adverts that tell people not to worry because we're insured with this company, or not to worry because we're insured with this company, we've got your back, we've got you covered. Suddenly now, many businesses are saying, yeah, but you don't have me covered because you're not going to pay these claims.
So does this, in a number of sectors, we're kind of seeing and saying, look, the world as we know it, the industry that we know it, the tech sector as we know it is going to be changing significantly as a result of this. Does this apply to insurance as well? Once we get through this, will the insurance industry as we know it have fundamentally changed? I know we're going to come on and talk about InsurTech, but give us a sense of the bigger industry here.
I think what this is doing is making insurers aware that they're not really capable of dealing with this stuff as quickly as people would expect. I think their systems are very slow, their processes are slow. I think they need to re-examine how it is they deal with customers. And I think that's where InsurTech comes in. And I've no doubt that InsurTech has an opportunity to move much quicker than it may have done.
Yeah.
Because I mean, us as brokers, just dealing with some insurance companies just now is absolutely horrendous. They just don't have enough people.
Yep.
The systems are clunky. To get changes done can take several days. It really does highlight the inefficiency of the sector.
Okay.
No
So
doubt about it.
yeah, no, so I mean, very good point. Leading on from that and speaking specifically about InsurTech, and we're already starting to get a couple of questions in around that. You know, how do you see the current situation with insurers? What does it mean for InsurTech? What do you think will be the future of the InsurTech market going forward?
Look, here's the problem. I think the problem with insurance is it's not like fintech. So it's not like the banking sector. Okay, the banking sector has lots of interactions. So technology comes along, speeds up those interactions, and creates a better customer bond.
Yep.
Insurance companies tend to deal once a year. It's a once a year policy, whether it's maybe even a life policy or a commercial insurance policy. It only happens once a year, so there's very little in the way of interaction. And that's what makes it slightly more difficult. And it makes it more difficult for insurance company leaders to seek out change, because what they have is solid systems that produce masses of cash flow. I mean, we're talking, I think it's something like $4 trillion a year go through insurance companies. It's huge amounts of money, huge cash flow. And that's what investors like. It's very secure. Yes. So at the minute, they're a bit slow with change. But there has to, because of this, become an opportunity where InsurTechs can bring in particular skill sets and technology to make that so much better, to the point where investors start pressing insurance companies saying, hey, hang on, guys, you've got to have better systems in place. If we're going to make money going forward, that's what we need to do.
Okay. So before I open this up to some of the broader questions, and I've got one teed up for you. What advice would you give to new InsurTech startups? You know, what should they be doing, and what do you think they need to do to make sure that they succeed in the insurance space, given what you've just laid out the big insurance companies are doing or not, as the case may be?
Yeah, I mean, I'm not an InsurTech specialist, but I mean, it's pretty obvious that you've got a series of things, haven't you? You've got a big market. Two, yep. You've got one that is clunky and needs to change. You have you have companies, big companies, where there is no specialist skills. I mean, I'm sure all the specialist tech people in the insurance companies have now moved to start their own InsurTech businesses. Yep. So these companies are crying out for things to happen. They're you know, and that space is a good space, but the product has to be right. For obvious reasons. But the other main things are that if you're an InsurTech, if you're a startup, if you're looking for opportunity, one, you must understand whether your product actually is any good for insurance companies, and not just because you think it's good for insurance companies, because they are very slow to change, these boys. So you've got to have that right. Two, insurance is very insular. We all know each other. I mean, it employs 300,000 people or something in the UK. It's very insular. We all know each other. It's a huge network. And InsurTechs need to be a part of that network, because that's where they will create. I remember years and years and years ago when I was a young, I mean, I'm still quite young, but a young insurance guy. And I left one company to join another. And an old boy who'd worked for insurance for years and years told me the most important thing about changing job is when I got to the new job was I had to work my patch. And what he meant by that was I had to be everywhere. I had to be at network events. I had to be on the telephone, you name it. I had to be making connections with people. InsurTechs need to do the same thing. The hard thing about InsurTechs is, where do you start? Who do you speak to first? And my tip on that would always be, try and use your own network to get to the top first. There is a tendency to look for the digital manager, and I'll just pitch to him. I think if you can get to the top and you've got the top person's ear, it's easier to then progress to the right people in the organization. Insurance is very much like that. I know if I know the CEO of a particular insurance company, I will get in front of all the other people I need to speak to. So I think that's a really important thing. And the other thing is, I know it's technology, InsurTech is technology, but you have to learn strategic selling. Not pitching, strategic selling, because insurance companies are multi-layered and several people make decisions in them. It's not just one person. So you need to learn the skills of how you maneuver between one person and the other, and how you win people over, and how you get yourself what would be called a coach, somebody to guide you through the organization. I think those are the key things.
Fantastic.
It's not just the tech.
Yep. Very good. Thank you. Well, let me open this up now, and I'm going to ask Stephen Muir to come off mute. Stephen, you've sent me a really interesting point in the chat about the recent AIG announcement. So do you want to just share that with John and everybody on here, and the questions that you put forward? I think it's a very interesting observation.
Sure, Russ. I mean, I'd like to say thank you to John. I think a lot of what you said is probably one of the reasons that the business that I'm in, a company called Sequence, it actually exists. Because with which was called Blackboard, which has been in existence for about 3 years now, into runoff. And they're writing off a $200 million cost associated with that business. So what message, and it's for anybody really, what message do you think that sends more generally? What effect do you think it will have on the investment community? Will it be taken as a warning that InsurTech is too hard to invest in, and therefore to be avoided? Or on the counter to that, will it be seen as an opportunity to invest in InsurTech more generally?
Really good question. John?
I mean, I don't, investment isn't going to walk away. I mean, I appreciate the AIG situation. They will have their own internal thoughts on that. It could be that they don't have the right team in there. It could be that they've gone down the wrong route. Who knows, what these guys have been working on. But we know for sure, don't we, that VCs are sitting on piles of money. And we know that they may be looking now to pick up cheap deals, but we know the money is there. So if the money is there, all they need is somewhere to spend it. To me, when you look at past investments of, I think Farouk at Credit Suisse said something like $4 billion worth of investment in 2018. That's serious money. There is money in this sector. And I think the AIG situation possibly is just a blip. I think there are still good products out there. There is still a big market for it. And I think anyone who is in the InsurTech game must keep pushing, because I think the change, although slow at the moment, will soon accelerate. And I can bet you the VCs will be in there. They won't miss an opportunity. Just because one company's pulled out, I don't really feel much in that.
And if I can also add as well, because, to me, I think, Stephen, your questions are the right ones, but actually, I've seen a lot of big companies try to invest, whether they're big banks and in fintech, or in this case, insurance companies invest in InsurTech. A lot of big companies, I think, really struggle to figure out how you move into these new emerging verticals. So to me, if I'm an investor or if I'm an InsurTech business, actually I'm feeling almost emboldened by this, if you will, because it's sending me a signal that's saying, look, a big guy is finding this particularly challenging. We must be doing something right if we're developing a disruptive business model that is gaining traction. And I know, Stephen, Sequence is really doing some very interesting things and very exciting things. So to me, whether I'm an investor or another InsurTech startup, I'm looking at this and saying, well, this is harder than we think, but also could this just be kind of a big corporate issue in terms of how companies try and address this? And I used to be the global innovation director for Telefonica many years ago, and big companies really, really find the whole corporate innovation side difficult if they're trying to do something like AIG is doing, or whether it's just investing in startups, it goes against the grain of how many of these big organizations are set up, the bureaucracy, the lack of innovation that they have, and it is much harder. So I would feel, if I was a startup, I'd feel emboldened by this and saying, good on us. We're really shaking up the industry. And John, I don't know if you've thought about that.
I think you've nailed it. But in comparison, if you remember when we were in Shanghai, Ping An, the big Chinese insurer conglomerate, we were told that they had 22,000 people working on artificial intelligence solutions for insurance.
Yeah.
Now that's one company with 22,000 people just looking at this particular area. So somebody believes in this, and the Chinese then, pre-COVID, seemed to be leading the way big time, and it was really impressive.
Yeah.
So the opportunity remains. In fact, as you say, people should be emboldened by this, because the big companies can't do it themselves. It's as simple as that. They need nimble, fast-thinking, clever people to come in and help them out.
It's interesting, and a question for you, and maybe to some of the others on the call is, if a company like AIG can't get it right in terms of kind of setting up their own business, are we going to see more M&A activity in terms of potentially, Steve, and I'm just going to use Sequence as an example, others out there looking at a company like Sequence and saying, ooh, why don't we go and acquire those guys? Let's get what they're doing and bring it into our business if we can't develop this ourselves. So I don't know what your thoughts are on that, John.
Yeah, I suppose the integration is the tricky bit for these guys, because a lot of them do still have, even after all this time, legacy systems.
Yes.
And we had one insurer just last year swapping systems, and it was absolute chaos. I mean, we could get nothing done with them because they were trying to change things internally. Yes. So whether that's because they don't have the right people or they just don't have the right technology because they're trying to use old style technology, who knows? But it's clearly not working.
Right.
I just would love to have the $200 million that they...
Oh, absolutely, yeah. Just to chuck it away.
Go pitch yourself. There you go. Say, look, we can do this for you. Let me bring
John, you should be talking to us.
Yeah, I should
That's
be.
my plug over.
Let me bring in the next question. So Sean Elliott, I know you've got a question as well, which I think is very interesting.
Hi there. Yes, it just seemed to be are the big boys too big to change? And then is there more space for smaller teams to get involved?
I think that's, if you look at somebody like Allianz and Munich Re, part of the same company, they are pretty agile in this space and they're pushing forward really fast. Lots of investment, Munich Re backing lots. In fact, some of these big reinsurance companies seem to be moving towards a model that cuts out primary insurers. So they are backing InsurTech models and giving them access to the Munich Re balance sheet and the underwriting capacity in that. So there is that. But I think your point is right, that some of these companies, they just feel like they won't catch up. Some do. I think people like Hiscox do. I think they get it. They get this stuff. There are some new MGAs like CFC Underwriting who get this stuff and are trying to do it better than everybody else. But generally speaking, everyone else is very slow, and you almost get the impression that they're just not going to make it. In 10 years' time, this could all be different, stunningly different. So I think it's a perfectly valid point that some of them just won't be able to do this, and that therefore creates the new opportunity. We begin to see that in the likes of motor insurance.
John, where do you, thinking of big, kind of UK-based insurance companies, you've mentioned Hiscox, but where is Aviva these days? Because I actually went, was it about 2-3 years ago, I met their chief digital officer. They had a whole office set up in Shoreditch to kind of come up with, radical thinking, new ideas, InsurTech models. But I haven't heard anything from them recently. I don't even know if they still have that operation up and running. But at the time, they were viewed as one of the big insurance companies really understanding this space. And people were saying, well, look, they're kind of doing a bit of what Barclays has been doing with Barclays Rise and their own accelerators, but it seems to have gone quiet. So where is Aviva these days?
Yeah, that's a perfectly good question, and maybe even Chris. I mean, Chris Marsh was doing some stuff with them. I think it was last year, Chris, wasn't it? And I don't know. They were busy. They were everywhere. They've just like faded. Maybe Chris can add to that. Can you?
Yeah, thank you. I think the expression that the road to hell is paved with good intentions comes to mind with a lot of what insurers have been doing recently. I think, yes, Hiscox have been involved in it, and we were working with them on a particular project, but internal politics seem to have got in the way within the organisation. I think they've had serious issues with their internal systems, which has slowed them down considerably. And I think that this all ties in with what John was saying earlier, that these are big sort of like super tanker organisations that haven't got the will to change. As Russ said, you've got people who've got the good ideas, and then you have to push it up the food chain, and you always meeting, well, we've done it this way, always done it this way, why do we need to change? People protecting their own backs, the civil service type mentality of the success, how you're judged as the number of desks you've got working around you. So innovation isn't what they're good at, to be quite frank with you. I think and I see it the same with BT and at Martlesham on the innovation labs up there. They've got their innovation suite of all their great ideas that they've had, but they don't seem to push them much further than great ideas, because the organizations just aren't set up to be that agile. And I think that's really important for people coming to the fintech business, that agile, young, smaller organizations can nip at the heels of these great ships. Be it, think of Drake and the Spanish Armada. He defeated it with little ships nipping away at the back of them. Think of the new fintech companies as Drake and the Armada as the existing insurers. There's a huge opportunity for people to come along, be agile, pick them off one by one, and win the battle.
I think, Russ, there is another kind of angle on this, and that is that I was listening to someone from Skyscanners talking the other day, and they were saying that when they started, they grew quite quickly, but then they really hit a stumbling block, and the stumbling block was that they wanted to grow faster. In order to do that, they had to improve several things about their business, and so they created lists of things, different projects that needed done. And they ended up having like 8 different major projects to do all at once. And the guy who was one of the founders said, that was the problem. We couldn't get any of it done because we had 8 different things on the go at once. And it taught us to narrow this down much, much closer to 1 or 2 projects at a time. And that really accelerated our growth. And I think big insurance companies probably do that. They look at the size of their organization and they say, right, we've got to do this, 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 and this.
Yep.
And in the end, they actually achieve nothing.
They don't focus.
Yeah, absolutely.
Let me bring in Mark Jenkinson. Mark, you've laid out a very good question in the chat. So do you want to jump on and ask it, please?
Yeah, sure, thanks. Sorry, I'm probably a bit of a newbie here, but I was just thinking, and I missed the start, so maybe you covered it, but I was just wondering, also, I guess InsurTech kind of covers lots of different areas, and John, you mentioned motor insurance, but where do you see the future kind of focus areas? Is it around health? Is it about business? Is it around motor vehicles? Where do you see the main kind of opportunities?
Yeah, I think the areas where change will happen in terms of product have to be the development of things like blockchain, artificial intelligence, robotics, big data. All of that kind of stuff is the change that's happening, or will make the change happen. I think certain products are easier than others. So, for example, motor insurance is quite a straightforward kind of product. It's one product for one person, and that's it. When you look at the other end of some of the stuff that we do, which is kind of corporate insurance, that's complicated because you have companies will generally have 3, 4, 5 policies. Each of those policies, same length as Romeo and Juliet by Shakespeare, 26,000 words of legal jargon in them. If you've got 3, 4, or 5 of those, it's very, very complex. So I suspect the early opportunities are at the other end, motor insurance, simple, clean projects. The minute companies try to change, like say commercial insurance or bigger end commercial insurance, it becomes far more complex. And there's far more questions to be asked. There's far more deeper understanding needed of the analytics in it. So, I mean, I think all areas will come under attack, that's for sure, because some of the InsurTech people we've met are bloody clever and they've got some great stuff on the go. So that everything will change, but definitely in the early stages, single product seems to be the easier attack points. And I guess we learn from that,
John, just on the motor insurance piece, I've also heard, speaking to a couple of insurance executives, that, with the advent of autonomous vehicles, self-driving cars, all that kind of stuff, are we going to have a need for motor insurance? And, if you are a single product insurance business, say in the motor insurance space, how are you looking at the next 5 to 10 years if, it's still a question mark whether this stuff will come in the next 5 to 10 years. It probably is coming, but what does that mean for, if you've built a big business based upon motor insurance and that could go away?
Absolutely. I mean, already there are insurances on demand. So people are looking at, car insurance. I'll only pay for it when I use it.
Yep.
And that the impact on insurance companies is enormous. It's enormous because their cash flow just drops off the end of a cliff when it comes like that. Especially now when none of us have really been using our cars. So, sorry, Russ, I've forgotten what was the.
Oh no, it was just is there going to be a need for motor insurance in 5 to 10 years if things like autonomous vehicles come to fruition? And is there some way to disrupt that if you're an InsurTech business, or if you're a large insurance business in the motor insurance space? What's going to happen to you if you can see that a good chunk of your revenues will disappear? So does this really drive the focus on building an InsurTech sector more quickly, where some of the incumbent players may not be around?
Yeah. If you look to the future in your crystal ball, that has to be the case, doesn't it? It has to be that many companies who really have had cash cows from different parts of the insurance business will no longer be able to compete in that space because they just won't have the cash flow, and the investors will rebel against it.
Can I make a comment around this? Because one of the things that's interesting around this conversation is the fact that personal lines insurance, such as motor that you've been discussing, have adopted new techniques. First with direct line 10, 20 years ago, whatever, and they were big disruptors in the market. So they have used InsurTech ideas. And I think that's a model. It's certainly a model for us. We have taken some of the the learnings from the personal lines markets, which are simpler, as you've described, and are applying them to the commercial lines, the more complex commercial lines. But I would take issue about the complexity side of things. Yes, it is yes, it is. There is a degree of complexity. The way we like to think about it is there is sophistication in the commercial insurance world. There's more sophistication than there is in the personal lines world. But that sophistication need not mean that we add layers and layers of complexity. And a good example of that comes down to product. It's the product itself. Whereas you were talking about the complete works of Shakespeare for each policy document. That's not necessary. It really isn't, because half of what's in those documents probably doesn't apply to individual customers. They're only having sections A, B, C, and G to Z don't apply to them. So half the document is irrelevant. But the industry has been very slow to adopt techniques such as policy construction that only contains the relevant relevant modules
Yeah.
for them. And so there are easy ways, or relatively easy ways, to strip out complexity in the sophisticated world of commercial insurance. And but I do agree that the larger incumbents are often hamstrung by internal conflicts, legacy systems, political issues, etc., and are, as somebody commented, not set up to be agile.
Yep.
and effect changes quickly and effectively. And I think that's where the opportunity arises, certainly in the sector of the market that we operate in.
The other thing that just kind of leading on from that is what kind of scares me about this is, again, going back to the visit we had to Shanghai, it was the size of competition. So for UK tech, really, and especially in the InsurTech space, we need to move fast.
Yes.
Because wherever you look, everywhere from Tel Aviv to San Francisco to Madrid to Shanghai, there are InsurTech businesses or people looking at InsurTech models. And there's lots of money, or there was lots of money before COVID, certainly being pumped into them. So if UK InsurTech wants to move fast, it's got to get on with it.
Let's build upon this point, and John, I want to follow up with you, and then Stephen, I want to bring you back in, and then obviously anybody else. But give us some examples of some of the InsurTech businesses that excite you, or you think have really come up with interesting models. Stephen, I want to bring you back in to talk about what you do at Sequence, because I think you're a very interesting business. But John, what are the companies? What are some of the InsurTech businesses that you've come across that you are excited by, enthusiastic by, and can say, building on your previous point, this is the future of where the sector's going, and we need to build these companies in the UK very quickly?
Yeah. Do you know, the one that catches the eye, and maybe catches everyone's eye, is without a doubt Lemonade.
Yep. Tell us about that for those who don't know Lemonade.
Yeah, because I think their main product is rental insurance. Okay. And what's just stunningly amazing about them is they can pay claims almost within minutes. Okay. And they can pay claims straight to your bank account, and also mostly via chatbots. It's a chatbot system. Now that is just, I've never had to use it, so I don't really know how well it works or not. But I mean, it gets great reviews. That's a game changer, that is. Because what consumers want now, these days, is instant gratification.
Yep.
I've had my claim, can I have the money, please? That's what they want. Keep it simple, keep it straightforward, keep it fast, and I'm happy. Because we live in a different age now from 20 years ago when you waited for the check to arrive through the post. Now there's companies using chatbots to pay claims. It's just astounds me, and it's way beyond my understanding of technology.
So given the start of this conversation, as you laid out kind of the broader insurance market and the issues that are there at the moment around the pandemic and not paying claims, sounds like Lemonade is well positioned to grow dramatically during this period and take advantage of the behavior that they're seeing from some of the big incumbents. Is that fair?
That's absolutely right, yeah. Couldn't agree more with that.
Stephen, would you just take a moment and just tell us about Sequence and what you're doing and how you guys came about in terms of being, an interesting player in the InsurTech space?
Okay, I'll try and be succinct. Cut me off if I start waffling. We recognized, as I think most of the market does, and John's quite outlined quite succinctly, is that the commercial insurance world is too complex. There's too many snouts in the trough. The value chain is huge, and with very few people adding an awful lot of value. And a lot of talk about only 50p in every pound of premium actually goes on to risk transfer. The rest goes to line the pockets of others. And so recognizing that and recognizing the opportunity that has also been outlined around speed of delivery, but also other things like quality, consistency, and so forth. So our business is predicated on basically medium-sized, small to medium-sized, but not micro businesses. We will do micro businesses, but we're in the more sophisticated market of businesses of up to 300 million turnover in some circumstances, or at least 100 million turnover in others. We set up initially with a product, which is a management liability, a financial lines product. We built a platform, our own platform, open architecture, APIs into anything you want. You can do with it. We draw on third-party data to effectively speed up the process, make it more consistent for underwriting purposes and pricing purposes, and it basically anticipates what the broker's going to need to provide in terms of information around the risk. So we started off with that product almost as a proof of concept, built the platform and launched the product, which is a modular product, which I was kind of describing earlier. If you want employment practices liability, or if you want crime as well as your D&O, you can add those to it, and the machinery will put the product together that you've chosen with all the limits, etc., that are appropriate to you, that you've chosen. And when we set it up originally as proof of concept, that we started writing business on the back of the broker providing answers to two questions, one of which was, what is the business? i.e., what's the name of the business? And confirming that that's the name. And we would then draw in third-party data and pre-populate what would be a quote form. They would then validate certain things, and if there were, had there been claims, etc., and all those sorts of things. So subject to some validation, two questions, and the policy document would be produced within 2 minutes from end to end, and that includes complete compliance checks about the customer. So in terms of speed of delivery, fantastic, easy, but then it was a relatively simple product. We've subsequently broadened our product proposition to include property and casualty, right? Which those of you who operate in the commercial world will recognize that that's a more complicated area, because property is a property, but who's in that property? What processes are being are evident in whatever the company does, and what processes might others who you're not insuring but occupy that property, what are they doing as well? But again, we're taking lots of third-party data. We've got something like over 50 external data sources that we draw upon, and we apply algorithms and smart technology that's way beyond my intellect to produce quotes and underwrite the risks in much the same way as that we had done with our financial lines product. Okay. Now it takes a little bit longer because there are more questions, but rather than put a quote request form online, the smart part of it, or part of the smartness, is that once we have details and we draw in a third party, it will only ask questions that are relevant to that risk. Because John, I think as a broker, you will know that talking to customers, they'll go, why am I being asked that question? That doesn't mean anything.
It's not relevant, yeah.
Exactly. So what that does is it continues to narrow and narrow. And as we get more data in, because we're a data predicated business, we'll find proxies for all sorts of things that we will then be able to just ask for validation on, rather than ask for questions around.
I see.
So in the end, you get your policy document with all the limits and sub-limits, etc., expressed in a clear, concise format that's easy to follow and comprehensible as far as the customer is concerned, which of course makes the broker's job that much easier in terms of having to explain what they have and what they haven't got covered.
And who's the security, Stephen? Who's behind it? Who's giving the balance sheet kind of support there? Is it
who are our backers?
Yeah, who are the underwriters?
Well, we're an MGA, so we do the underwriting, but we have capacity provided by a number of A-rated suppliers like Zurich, Arch, NIG,
I see.
and others. We actually have people who want to work with us, but we're choosing not to at the moment. But so we're in a fairly fortunate position. So as I say, the question about Blackboard was, earlier was really self-interested question, because we see that as our market that they've just pulled out of.
Okay.
And we've got a number of broker working with us, and to be honest, and as you two know, Russ and John, our view is that COVID is a catalyst for change in this marketplace, because of the chaos that ensued when lockdown was first suggested, and we all had to work from home. Well, frankly, we've been working from home for 2 weeks beforehand because none of us wanted to get COVID, and so we decided to go our separate ways, and we've been working remotely for over 50 days now. And if I can just make one more bit of an advert here, in April we met our new business targets, and that to us was amazing, because we thought that the confusion in the industry was going to be such that it would make it really quite difficult. But we've seen a move away from certain incumbents, certain of the large incumbents. One other point and I won't name names because it would shame some people, we insure our management liability through a broker with a large insurance company, who have refused to offer us renewal terms on the basis that we're stealing too much business from them.
Oh, there you go. Okay.
Proper disruption
in action.
So we feel we're doing something right. That we're still a long way to go. But I think we're moving in the right direction. But my concern, the AIG question, was that perhaps investors may see that it's a problematic area these days, rather than an opportunity.
Okay. John, any thoughts on what Stephen's just outlined about Sequence and what they're seeing? And then I've got one more question for you before we wrap, about a kind of a bigger picture bit.
Yeah, no, I mean, what Stephen's saying sounds great, doesn't it? I mean, that's and for people like us as brokers, that's what we need. I think at the minute we're good at relationships. We're good at clarifying risk, understanding where customers might go, but where we all fall down is the pace that things are done. It's just too slow, and it sounds like Stephen's model has picked that pace up dramatically and made the whole process just a bit simpler. You can't argue with that.
You can't.
It also enables brokers, because it's cloud-based, it enables brokers to work wherever and do.
That's another. Yeah.
They don't need to wait for the underwriter to get out of bed.
Yeah.
One kind of, because we're coming up to the half hour, one kind of bigger question for you, John, is, given everything that we've just discussed over the past hour, many of the points that Stephen has made, some of the questions that you've received, look into your crystal ball if you can. Fast forward to May 2021. What does this space look like? Assuming that we're still going to be in this pandemic for a while. We may see a couple more waves. We're starting to see how the big insurance players have been handling the situation. We're hearing, from players like Sequence about the opportunities that they're seeing. Where do you think we're going to be in a year from now in terms of both the big insurance players and the InsurTech market, to kind of wrap us up here?
Yeah. I think the biggest thing that's come out of this is reputation and reputational damage for insurance companies. I mean, insurance has always had a bit of a reputation problem because, you know, the insurers are always blamed for using the small print to get out of paying claims. I'm not entirely sure that's always a legitimate kind of argument, but there's just no doubt their reputation, for most of them, has been damaged by this big time. I think the InsurTechs will make a move, and that will begin to improve things and will help insurance companies create better relationships with their customers. So as opposed to once a year, that they'll be in more regular communication, make it easy for people to do that. But sometimes the problem is consumers.
Yep.
And consumers are always looking for the cheapest, pretty much. And if insurance companies are cheap, then people will forget everything that's happened. That tends to be the way. They just forget the problems that happened before because this is a cheaper product. Now, if you combine that with what insurers are saying now, and were saying before COVID, that they've got to push pricing up because their losses are too great, we have a fascinating year coming ahead where insurers are trying to put prices up, customers are trying to get pricing down. I mean, just the other day, Allianz reported this $1.4 billion slide in income in the first quarter. That's indicative of what's about to happen. Absolutely. Because that's early stage. Yep. So by the end of this year, there's going to be some big pain in the insurance markets. And it's at that pain point that the InsurTechs need to be active. And they need to be building their networks. They need to be talking to the right people. They've got to open the doors. They've got to start working with the right people. If they do that, then it can all change. The year after, it could all be changed. It's an opportunity to be grabbed, I think.
Yep. Very good. So
easy, eh?
We'll come back to you in a year and see if this is all played out. We are recording this, so we've got you filmed with your prediction. Thank you. John, thank you very much for taking your time to share this with us today, getting your advice and your perspectives. And many thanks to all of you, Stephen and others, for your questions and for your observations. So just a quick wrap up from me. Again, the TLA COVID-19 Resource Hub is on the TLA website. There's lots of great information on there. We're getting ready to record our next TLA Surgery podcast this Friday, and that will focus on managing growth and financial performance for startups. And then if you'd like to ask our guests any questions, do please let me know. Our next TLA Forum will be on the 20th of May. So take a look at the website, take a look at the TLA LinkedIn group, TLA Twitter, in terms of the themes and events that are coming up. Your next newsletter will be coming out next week, so we'll have more information in that. So in the meantime, everyone, thank you for participating. Look after yourselves, stay safe, and enjoy a bit of the sunshine today. Thank you.
Well done, Russ.
Thank you very much.
Thank you.